Welcome to the September 2025 Real Estate Market Update brought to you by the Reby Homes team. First, a little bit of good news in the mortgage rate world. They've hit the lowest point in the last year, which is opening up some opportunity for struggling buyers. The average mortgage payment is about $250 lower than what it would have been just a few short months ago, so things are moving in the right direction. Yesterday was the Fed meeting that resulted in a 0.25% interest rate cut. Although that's great news, keep in mind that interest rates are not the same as mortgage rates. Long-term rates, like mortgage rates, are based on the 10-year treasury. So the decline in mortgage rates that we've already seen was actually baked into markets in anticipation of yesterday's meeting. As of today, September 18th, 2025, mortgage rates have actually ticked up a bit following the Fed meeting. This is due to the market reacting to what the Fed Chair Jerome Powell actually stated in the meeting yesterday, which was that there's dual risk in both unemployment and inflation, and that further decisions are highly conditional, dependent on the next jobs report and inflation numbers. So right now, future rate cut decisions are a moving target. This means we can expect minor fluctuations in mortgage rates in the coming weeks, and two factors to really keep an eye on that'll give us an inclination of another rate cut or not will be that jobs report and inflation numbers. As for home price appreciation across the country, if we take a look at list prices going back to January of 2023, we can see how flat they've actually been. No major swings in either direction, just little fluctuations over the last 2.5 years. Of course, this is highly dependent on region, but as a whole, the country has not seen any major changes in home prices, and it's very possible that we'll soon start to see that recovery begin, sending that trajectory line upwards. With that being said, positive growth is still extremely slow. This summer shows even slower growth than last summer, but again, varies drastically region to region. The lighter blue regions saw less than 2% growth, while the darker blue regions saw more than 3% growth. There's a lot of chatter about the possibility of a recession, so let's talk about it. Both experts and consumers have been on high alert of a recession for a couple of years, with some believing that we may already be there. So, what does it mean if we are? Recessions essentially mean people spend less money and businesses make less money. Of course, this can be very painful or even business ending for many, depending on how long the recession lasts, but the good news is recessions don't last forever. Following a recession comes recovery. Prices eventually have to come down, making things more affordable, enticing consumers to start spending again, making businesses more profitable, and in turn, reinstating the jobs that were lost during the recession. It's a big cycle, and historically, it happens every 10 to 20 years. What happens to the housing market following a recession? Well, historically, it recovers and prices improve. As rates are lowered to ease the economy, more buyers feel comfortable entering the housing market. This creates more activity, stability, and eventually competition, which we know pushes prices up. So whether you believe that what we've been seeing the last 2 years fits the textbook definition of a recession, there's no arguing that we've seen less consumer spending, high rates, and high prices. Although many can still afford to spend and are, doesn't mean it's sustainable. Something will inevitably have to change to ease inflation and improve the economy. It's just a matter of time. As for foreclosures, in the first half of 2025, 0.13% of all homes had a foreclosure filing. That's not a foreclosure, that's just a filing. That's about 188,000 homes. Of that 188,000, roughly 11% or 21,000 of them actually foreclosed. For comparison, the housing crash of 2008 hit its peak of foreclosure filings in 2010, which reached 2.9 million filings. Of that 2.9 million filings, 1.178 million actually foreclosed. So let that number sink in and ask yourself if we're seeing a similar trend right now. And finally, let's take a quick look at what's happening here in the Phoenix metro area. Active listings, not including under contract in all areas, are at 23,238. That's a 28% increase year over year, but it's actually down 2.2% from last month. Under contract listings, including pending and contingent sales, reached 7,260 as of September 1st, which is up 9% from the 6,658 last year, but down 1.5% from 7,369 last month. Monthly sales hit 5,900, which is up 3% from last year, but down 4.7% from last month, which was 6,193. Monthly average sales price per square foot is at $281 a square foot. That's down 2.7% from last year and 1.3% from last month. If you look at monthly median sales price from September of last year, September of this year, and August of this year, all are at $445, which has remained flat. It's not a secret that sellers have had a rough year, but the last 2 months have given a little bit of relief as new inventory dropped off in August. Listings without a contract dropped off the market 2.2% in August and 6.2% in July. So the sellers that did stick around can thank them for removing some of that competition. Typically, we see supply grow between Labor Day and Thanksgiving, so we'll see how inventory trends continue this month. Buyer demand is strengthening as rates have improved, and we can see that through the 9% increase in listings under contract from this time last year. Another reason for improved buyer demand is that price per square foot. Last month, closed listings sold for 2.7% less in terms of price per square foot compared to August of last year. With inflation hovering at 2.7%, it's improved price per square foot for buyers by about 5% compared to this time last year. But for those optimistic sellers who prefer to believe that prices have stayed flat, just take a look at median sales price. Different stats will tell different stories, so choose what aligns with your beliefs and trust your gut when it comes to decision making. As always, we're here to inform you on all things housing, so please don't hesitate to reach out if you're looking for clarification or specifics in your area. Thanks so much for watching, and we'll see you next month.